Right, so based on the feedback I got for the exam boot camp, quite a few students wanted me to have a look at pre-evaluation date assets, specifically the TAB formula. But I thought it'll be quicker and simpler if I do it on a video. I don't want to spend time during the boot camp working on essentially theory. It has to focus on practice. So what I want you to think about is the following scenario. We have the 1st of October 2001, which is the date on which CGT became applicable. And let's work on an asset that was acquired 10 years before 1 October 2001 for an amount of, let's make it, 100,000 Rand. Now, if I'm dealing with a pre-valuation date asset, in order to determine my valuation date value, which is needed to determine base cost, I have one of three options. I can either use market value, which will always be given to you on the 1st of October 2001, or I can use TAB, the time apportionment base cost formula, or I can use 20% of proceeds less expenditure incurred on or after the 1st of October 2001. Right. Now, market value will always be given to you, and this one is relatively easy to work out. So what students seem to be struggling with at this point in time is TAB. Now, just before I move over to the TAB formula, remember, if you are given a scenario with a pre-valuation date asset, and the question doesn't clearly tell you which one of these the taxpayer has chosen, you are going to have to calculate all three, and then based on which one gives you the highest valuation date value, choose that one to go into your base cost calc. But enough of those. Let's quickly have a look at our TAB formula. Let me just get rid of all of this. Right, so there's my asset that I bought 10 years prior to the 1st of October, and let's say I now dispose of it 20 years. Let's make it 20 years after the 1st of October, and my proceeds is R1,000,000. Okay, ridiculous amounts, but let's use that for purposes of our example. Now the question is, if I have to use TAB, how do I know which formula to use, right? So in this scenario, if I have an asset and there's only expenditure incurred prior to the 1st of October, so I only have my acquisition expenses prior to the 1st of October, right? So all expenditure incurred in relation to this asset happened prior to 1 October 2001. What I will then use is simply the TAB formula. And I really want to encourage you, if you haven't done this already, to go to your textbook in SABA. It is 6.8.1, and in your student's approach to natural persons, it's 13.8.1. To actually work through that theory and just unpack it for yourself and do all those examples, because that's going to show you exactly what you need to do and why you use only the TAB formula if it is expenditure incurred only before the 1st of October 2001. So if expenditure was only incurred prior to the 1st of October 2001, we only use that TAB formula. Now, let's say I purchased the asset 10 years before the 1st of October 2001 for 100,000 Rand, and then in the 2005 year of assessment, I improved it for another 100,000 Rand, right? Now my issue is I have expenditure that was incurred both before 1 October 2001 and after 1 October 2001. And what now needs to happen is I now need to also think about my standard proceeds formula. So I can't just go straight into the tab formula. I have to go and use my standard proceeds formula first. And after I've done that, after I've determined and adjusted the proceeds, I then only go into tab. So again, I really want to encourage you to go to the textbook, syllabus 6.8.2, and Students' Approach to Natural Persons 13.8.2. And that's the tab formula. Remember, the formula will be given to you in the exam, and you just have to know how to use it. So what constitutes B? It's expenditure before 1 October 2001, which includes acquisition costs. A is expenditure incurred after. N is the number of years from the date of acquisition until the 30th of September, and T is from 1 October 2001 until the date of acquisition. I hope this helps.